So Russell, the IPO pricing above the marketed range of $20 to $23 a share after being upsized. Can you tell us a little bit about what the reception was like from investors?
You know, we're really pleased to see that opening. I think the market is validating the value that we bring to the aerospace industry for a long period of time. And I believe that the market interest we've seen is very positive.
Bloomberg had reported that Carlyle was at first looking to sell the company, but in the end it decided on an IPO. I'm curious what led to that decision and how your company can execute better now that it's publicly listed.
Well, look, there's always options for next steps as companies continue to grow. And we exercised a dual track to look at both offerings, both a public and a private track. We decided that the public track was the most appropriate track for what's going on in the aerospace industry and the opportunity for us now to access entirely new business partners that would allow StandardAero to continue to grow and provide the necessary maintenance for the increasing flying demand.
Yeah, in the end, an IPO would actually give you a higher valuation than an outright sale. So what do you think that says about valuations in the public market right now?
Well, again, it reinforces that the aerospace industry absolutely has a very bright future. The flight hours are increasing across commercial aerospace, as well as the business aviation market. The number of flight hours are increasing much faster than the number of new aircraft being added to the fleet, and that means more maintenance as engine programs live longer on top of the new programs that are being added to the market. And on the military side, there's a lot of expected investment to be made for service life extension programs of existing military programs.
So it sounds like the current shortage of commercial aircraft is definitely good for your business. What kind of projections are you making in terms of growth rates as a result of that shortage?
You know, parts in the aerospace business have always been somewhat constrained because we deal with unique materials. Fortunately for StandardAero, a big portion of our business allows us to do repair of engine components. We have one of the largest component repair businesses as part of StandardAero, greater than $500 million a year, and that allows us to provide additional solutions for our customers in case of any type of material shortages. So it actually is good for us, but it also supports our speed and ability to deliver good turn times to our customers and keep the aircraft flying.
You serve the commercial, military, and business aviation end markets. What's the breakdown between those different markets, and what do you want it to look like in 5 years' time?
We have a pretty even balance across those different subsectors. We have consciously built the company that way because those different subsectors, as you might imagine, the maintenance requirements on a commercial jet are very different than those on a military jet or on a business jet. As a result, when you get to periods of economic volatility, as we just went through, we're able to move our work and our workforce to the different sectors where there might be growth to offset sectors that are having a little bit of trouble. That allows us to work very smoothly and to dampen any type of economic perturbation.
All right, Russell Ford, really appreciate your joining us. Russell Ford is CEO of StandardAero, which debuted on the New York Stock Exchange today as a listed company, opening at $31 a share, currently at $31.30 a share.